morning, good afternoon, good evening, traders and omniacs from across the globe. Thank you for tuning in. A very interesting webinar from me today. So, I've been part of Wall Street, grew up on the exchanges as a kid since I'm 18 years old, 43 years, all over these markets. I live and breathe these markets, right? So when I do a webinar, I basically spend a few days coming up with what's happening right now in the markets. And then I present a bunch of charts for you so that you can see what's coming next. But this webinar is going to be different. What I did in this webinar, I don't know if you guys know who I am, so I'll just show you something quickly. Just about every night, I do a YouTube video, goes out to my fans all over the world. And in that video, I'll tell them what should happen the next day. Then we're live in a trading room going through those trades. So in last night and the night before's video, I did an offer. I said, listen, I'm about to do a live webinar. If you leave comments under these videos, I will take every single chart that you asked me to analyze, and that's what my webinar will be about today. So this webinar is about you. It's got nothing to do with me, and I love doing it. So everything I'm about to show you is a suggestion or a request from an omniac who wrote on my YouTube video. So not my style, but hey, you know what? You omniacs came up with great choices. So I've analyzed each and every one of those charts, and I'm going to go over each and every one of those charts for you right now. One of the first ones was Tesla, and how this year began with Tesla was me putting on the brakes to Tesla and saying, hybrid is the wave of the future. We are getting away from just EV only and moving to hybrid. The EV is overdone. The path is shown to be incorrect. And now Elon Musk and or Tesla should start to drop. And after I did this, it was January 2nd, somewhere right here. I offered 6 targets for Tesla. The first 3 were 212, 200, and 192. We were trading up at around 250 when I started calling for the downside. Well, guess what? 212 got hit, 200 got hit, 192 got hit. Fantastic calls from OMNI. What happens next? I put out a second set of targets, 173, 164, 151. What happens next? We come down and hit 173. What happens next? We hit 164. And what happens after that? 151. Every target was seen. In fact, we almost called the absolute low. Pretty good, right? Rock and roll for OMNI targets. Now, a lot of people are worried that Tesla's just going to fall apart. And for you bulls, I've got a gift for you. Are you ready? Watch this. For you bulls, I've got a gift. You know what we do have happening out there right now? If I can pull it here, I'll show it to you right now. Now, this will work. Check this out. Let's make it nice and dark so you can see it. We'll make it black so you don't miss it. And check this out. You bulls are going to love this, I promise. Boom. Look at that 40-bar algorithm running on Tesla. From here, it just goes crazy, and it works every single time. So let me grab this ellipse. Look here. Boom. Done, right? Market cracks. Where's it get back to? Right there, and Wall Street comes in and hits it. Comes back down. What's it get up to? Right there. And what does it do? It gets above. Then it holds, and we're there now. Tesla has to be up $10 right now. I don't think I can update. I don't think it'll show me the update yet. We'll see if it comes in. All right, so no update yet. Bouncing off that average, Tesla up $10. So for you bulls right now, we've got a little bit of a move. The likelihood is Tesla will move a little bit higher. Maybe take out these highs here. We'll take it one day at a time. But for now, what I will tell you is if you're going to trade Tesla for the rest of this week, make sure that you're above this average. If you're above the average, buy dips. If you get below that average, sell rallies. So Tesla's up 1052 right now, bouncing off that average, and it's exactly what I had planned on showing you. I did the analysis over the weekend, reiterated the analysis again on Monday, and said, wow, that's absolute. Let's show the webinar. Let's show the OMNIX at the webinar. So if you're going to trade Tesla, use the 40-bar algo or 40-bar simple moving average. By the way, if you don't know this, a moving average is an algorithm. So it's simple because it's one set of calculations, but it's an algorithm. And if you don't think Wall Street is keying off this algorithm, boy, oh boy, you don't know what's going on out there, kids. They are keying off of it every time you get near it. Right now, they're keying off the buy side. You can buy dips in Tesla as long as you stay above the 40 SMA. The next chart that was requested was Mara. There's two types of Mara. One's a crypto, one is Marathon Digital Holdings. The crypto chart looked horrible to me, so I thought I'd show you this one. Mara Digital Holdings. And remember, none of these are my suggestions. These are my Omniacs around the world asking me to analyze charts during today's presentation. So I didn't get much from Marathon. I don't know really what I would tell you except for this. Check and see if this is actually a bear flag. If it is, you're going to know literally by today or tomorrow. If this is a bear flag, which it certainly looks like, right now it's a possible bear flag. If it turns right here, let me grab something. If it turns right here and starts to dump, then we know that we absolutely have a bear flag and you should start heading for the downside. So if you're trading Mara, this is your deciding point. This is where you want to decide what to do next. Now, traders, what I promise to offer you is very simplistic analysis that anybody of any level can understand and actually put to work this week to help make some points or money going forward. So I will keep the analysis very low level, very simplified, so none of us get confused. Can I dazzle you? Can I turn this around and make it so complicated that you think I'm some genius born on Wall Street and no one else knows what I know? I could, but that would make me like everybody else. I like to uncomplicate this mess so you can actually use the information I offer and it'll help you. So we're not going to complicate anything. You want to learn about this, you come see me. We're going to keep this simple so you can understand what you should do to make money this week. So whoever asked me for Mara, I'm not going to out anyone that asked me for these different stocks, commodities, and or cryptos, but I will answer your questions for you. The question in Mara, M-A-R-A, Marathon Digital, is that you are absolutely looking at what should be a bear flag, and if you start to fail here, you could then get short for the downside. Getting above that bear flag would negate the possibility of it being a bear flag, and then we'd go look and see what else is brewing right there. For now, we'll call that a bear flag possible and leave it off to the side. What was asked of me next? Nvidia. Who doesn't want to know about Nvidia? Nvidia. Hey, if you like what you're about to see, please like and share. My name, livewithoscar.com. Come join us. We do fantastic work, and I don't charge anybody to hang out with me at my trading room. It's all free. You come join me and spend your life with me like everyone else does. So what are we looking at? Nvidia. Nvidia is just bouncing off this wonderful trend line. It is testing resistance up here. And if you ask me, it's going to best that resistance. Knock, knock, knock. It has been knocking on this door too many times. In other words, we've got this. You've got an instance where you went knock. The door didn't open. Knock, knock. The door didn't open. Came down. Knock, knock, knock. And now we're starting to knock further. And we're hitting it again. So my work tells me to tell you we are projecting higher. When they report this week, it'll be for higher, and this market should move much higher over the next few days. Now, if we get this resistance and just get it out of the way and pretend it doesn't exist, what else is going on here? You're in a very smart channel. Let me just make sure that that's extended. You're in a very smart channel, moving higher. There is no reason why you should not continue to move higher inside of this channel. So that's what I was looking at for Nvidia. And you know, you can do things on these charts that you can never undo like that, right? Very scary. Anyway, so Nvidia looks like it's going to stay in this channel and work its way higher. And I think the news of reporting will prove exactly that. When they report on Wednesday, I believe it's Wednesday, up we go. That's what I'm looking for. Knock, knock, knock on the resistance. You cannot knock on a door in such a busy market in this arena this often without the door opening. My opinion anyway. So that's your Nvidia chart. Technical opinion. I personally have zero opinions about where markets go. I use the chart analysis, which inside of this chart is all the reports that are going to be released, the reports that have been released, government reports, reactions to such, our reaction as a bunch of humans around the world, what fund managers are going to do. Everything that's going to happen is in this chart. You know what's great about this chart? It doesn't have alimony payments. It doesn't have child support payments. It doesn't have a reputation. It doesn't care. It will tell you the pure news. All you have to do is read it with pure eyes. Now that's the trick, right? Getting your opinion out of reading charts makes things difficult. If you can learn how to read charts without your opinion, whether you hate the company or love the company, has zero to do with where the stock or chart will go. I don't know if any of you would love Bill Gates if you met him, if you sat down and had dinner, and if he tried to marry your daughter, you probably wouldn't like his personality. But don't you love his computers? Same sort of thing. You know, you do not have to like what it's about to like the stock itself. So let's go look at the next one. Someone had requested crude oil. Now, crude oil, if you ask me, anytime crude does something like drop from 87.67 all the way down to somewhere like 76.70, that, my friends, is a worldwide instantaneous stimulus, which helps buoy the stock markets. It does every time crude drops. It's a reason to push markets up. When crude rallies too high, people get nervous, transportation stops moving, and it pushes markets back down. You've had a nice down move in crude, and it's helping to push the market higher. What else is going on in this crude chart? If you ask me, this is a bear flag, and the whole thing's built, which is wonderful. The whole thing is built below the 200 bar moving average. So let's see if I can get this into place for you. I think this is a bear flag. I think this bear flag is being built right below the 200 bar moving average. I think Wall Street is absolutely going to keep their eye on this. They see what's happening. They are not blind. I promise you, I grew up on Wall Street. These formations and all the geometry that I will show you in today's seminar, webinar, if you will, are all incorporated into Wall Street algorithms. It's how they know what's going to happen next. And it's all about geometry, I promise you. So you've got a bear flag under the 200 bar moving average. You just had a drop from 87 to 76. And what else? Well, you're in a channel. Look at this. There's nothing but bearish, bearish, bearish going on here. Can it get above the channel? Can it get above the flag? Can it get above the 200 bar moving average? Well, sure, it could. But all of them are putting pressure on crude right here at the same spot. If you ask me, that's enough to push crude down. You want more voodoo? Let's give you more voodoo. Let's move this away. Let's move this away. Let's move this out of the way. Let's get rid of all this proverbial voodoo. Some of you don't believe in this stuff, right? So we'll call it voodoo. And we're going to get it out of here because there's more voodoo to put on this chart to show you. Watch this. It's not the only things that technically look bearish. There's more. And when we get this out of our way, we'll show it to you. What else is happening out there? Well, this is a head. These are shoulders. And you've got a head and shoulders right here. So it is basically bearish, 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 bearish indicators, plus then the bear flag, if you will, sitting underneath, right, the 200 bar moving average. So I say crude continues lower unless something dramatic happens. Looking at the chart tells me crude moves lower. Now, I will tell you this, I am from Wall Street. Your key is going to be here. When you can get crude above the 200, the street pays attention. When you get below, they also pay attention. Wall Street, that is. So you are at a quagmire spot right now. They are watching right now. It's got reasoning to go down, not up, and that is what I suspect from technical analysis. I have no opinion myself. The analysis tells me to tell you likely lower in crude. I hope that helps for whoever requested the crude chart. Let's move on. Oh, silver, hi-oh, silver. Whoever requested silver, please understand this is a bad one. This one is known to be the widowmaker. It will take the money from your pockets. It'll take the money from your friends' pockets. It'll take the money from grandma's pockets. It'll take the money from everyone's pockets. I know I started in this pit as a kid at 18, spent most of my life in that pit. In fact, I like this market so much that every day of my life, I keep a silver dollar and a gold Krugerrand in my pocket from the days of trading on the floor. Silver, I know it really well. I promise you, it'll take your money from you. Every now and then you'll get lucky. What does silver do? It trades in sympathy with gold more so than on its own. Gold rallied, Silver rally projection 3475 to 3500 is a very short-term, near-term projection, but short-term is your projection there. All right, you got a short-term projection, and it is 3475 to 3500. Now, nothing goes straight up, but that is your short-term projection in July. So, what else are we looking at? Now, remember, these charts are all being presented because somebody requested each and every one. I don't know that these would be the charts that would have been in today's webinar if it was on me, but I've liked every one of them so far. Good job choosing charts. PayPal. I have to say, I spent an hour on this chart, and no matter what I did to it, I came up with almost nothing. Not much there, but at least there is the channel. What do I mean by that? Well, you've been in this bearish channel for a long time, and finally a bullish channel emerges, right? So now you're on the right side on PayPal, moving higher, but I have to be honest, I have nothing real to give you on this except for being that you're in the bullish channel. Let's look at it in the simplistic form. Maybe it'll make its way back to the top of the channel. Why would I say that? Well, it seems to go from the bottom to the top, just about the bottom, through the top, hits the bottom, almost the top, almost the bottom, almost the top. You know, let's see if it wants to do that. That's about all I can give you because there's really nothing here. I mean, I can make something up, but you know, there's no need for me to do that, right? If you want the truth is there's really nothing to look at. And in fact, if I really wanted to beat up on PayPal a little bit, I would call this a bear flag right here. You know what I'm saying? I would think that we're in a bear flag right now. So I don't love PayPal. I just like the fact that it's in a channel. So maybe that is your bear flag. Maybe that's actually what's going on. I think if you use your imagination, you can do a shoulder to a head and a shoulder right here, a baby head and shoulders, and the bear flag. But for now, let's get rid of any of that thought. Let's say that doesn't exist, right? We won't call it this at all. What we'll do is we'll take the bigger picture, and on that bigger picture, we'll just call it the green channel moving higher, and maybe that will help. So for PayPal, for now, yes, it's moving up. I don't love the stock. I don't hate the stock. I wouldn't trade it personally, but if you want to know what to do, stay inside of this channel. Buy the dips on the low end of the channel, sell out on the high end of the channel. It's been that way since November of last year. So that's what I have on PayPal. Whoever requested PayPal, I hope that helps you a little bit. Next is Generac. Generac Holdings has a target of 156, but I will tell you, I put that target on here before this bar existed. Now that bar jumps up, makes me look brighter, but I did the analysis before the bar existed. I came up with 156. That puts us up, you know, right about up here where, let me draw a trend line for you. That puts us somewhere about up here. And then we'll make it nice and thick so you can see it. Right about there at that blue trend line is what my projection is. Short-term projection, I'm not calling it a top by any means, but it's channeling itself higher. The big blue channel, right? You had this monstrous blue channel, and the market channeled itself higher. Boom, boom, boom. And then caught this channel, right? A new one started. Now, inside of that, an even steeper channel, and you broke out of the original first blue channel. So it's channeling higher. It's using a lot of geometry. Wall Street's bouncing off the geometry on this, and it's projecting to about 156 for the near term. That's your Generac. I hope that helps. Again, I was hoping to show you this chart when that day wasn't on there, but I updated this morning and boom, there was a big bar. But that was the call when we were down here. But the webinar happened on Tuesday, not Monday, so I couldn't get you the information on time. All right, so that's Generac, and we're certainly looking for higher up at this blue line. Let's see what else was requested. Oh, Microsoft. Well, I better start moving. I'm only not even halfway through these charts. You requested a lot of charts. Microsoft, what do you say about Microsoft but this? Round of applause. Look at that chart. Look at that market. Look at Wall Street just banging away on the 48-bar algorithm. Just loving it to death. So it's in a channel, right? Once again, we're using channels. We're using simplicity here to show you what's going on. It's in a channel which starts itself right about here. Boom. Also hits that average. Interesting. Rallies up. Where's it catch? The average. Rallies up. Where's it finally break from? The average. Down to the bottom of the channel. Jigger jags around the average, gets above, starts a new channel. Fantastic, right? That 48 bar is making all of this happen, and Wall Street is just keying off of it. So the channel is projecting higher. We expect this to stay inside of the channel and work its way up and eventually make its way up here to the top of this channel. So being that channels seem to be the in vogue on Wall Street right now, which means they're just going crazy on geometry. Let them create the channels. We're smart enough to know how to use them. They're simple too. I hope this is helping you in some way. Remember, today's work is abstract for you so that it's simple to understand. You can go home and redo it yourself. I'm not trying to get into the OMNI, the Oscar's Market Navigational Indicator, and how it comes up with daily day trades every day and where to get in and get out. Not for this. You've asked me for help. I'm going to give you help today. So let's see what else we can come up with. Ethereum. Wow, Ethereum sitting there out of nowhere, right in the middle of the crowd. You guys asked for Ethereum. Okay. I did not, by the way. I did not take the charts out of order of the requests. I literally lined them up in request order. So it might jump around a little, but they're great charts. So Ethereum on the 55-bar algorithm, moving average, whatever you want to call it, it has kept this thing in check every single time it's gotten near it. I have shown this to you many times on Bitcoin and Ethereum. Look at how well this average just keeps this market in check, in check, in check. Gets underneath, fails, keeps it in check to the downside after that. Then, boom, what happens next? You get above the channel, see the channel breakout, above the average, and the street pays attention. Wall Street always pays attention to the simplicity I'm showing you. I promise you, there's so much complication out there, but when you bring complication to an already complicated business like trading markets, you're just overcomplicating things. Now, yes, I've got way more intricate ways of getting in and out of these markets for day trading, but for abstract viewing, which way should they go for the next few days? This is the perfect way to figure out what comes next. I promise you, Wall Street was waiting when this happened and absolutely waiting when that happened. It doesn't happen by accident. It's not random, and it's not an accident. It is Wall Street keying off of particular areas and particular things that I've been trained to follow my entire life, which is what makes me so helpful when I teach people. And I'd be more than happy to teach you. Just make sure you come on down to live.oscar.com into my free trading room. So listen, there are a lot of traders out there, or whatever you want to call them, analysts. How many of them grew up on the trading floor as a child and spent his entire life there? That is where we learn how these markets actually operate. That's where every entity who builds the markets called to. We got to know all of the facets, all of the assets, all of the different personalities. That's how you learn how markets move. You know what I mean? Then after that, you throw your analysis at it. But first, you have to know how they move. A handful of us on this planet have ever had such training. I am one of them. You are blessed to be in my presence. If you come hang out with me at Live with Oscar, I would be blessed by you if you would show up. But I promise you I can help you in 1,000 ways. Just come hang out with me. What's next? All right, so we just did Ethereum. And I do believe is soybeans. The next request was soybeans. Now, a lesson, if you don't understand abstractly how markets operate. Soybeans, somebody writes to me, Oscar, look at the soybeans chart. Why is it getting so bullish? And I said, why? Come on now, don't you know how this works? This makes perfect sense. It's a summer market. I'll show you what that means. But soybeans is a summer market. So soybeans, corn, wheat, oats are going to get busy in the summer in the US. as opposed to softs, which are busy in the winter. We'll get to that. So check this out. What you have in soybeans is this monster average just killing it for us. Let's make it nice and thick. Look at this average just killing it for us, just guiding the market. Does anybody, if you're trading a fund that trades soybeans, could you possibly need more information than this average right here? I mean, you don't need grandma on the phone to tell you what she thinks with the Maloika. You know what I'm saying? You don't need any of that. This average is just perfect. And Wall Street is keying off of it. So what do they notice? They notice it's A, summertime planting season. B, bull flag is brewing. C, it's above the average already. Everything about this says it should move higher throughout the year. Now, does it have to go up every day? Of course not. It's soybeans. It's not going up every day. But soybeans is showing you that summertime, from spring to summer, is when the grains put in their lows. That is just a given, unless you have an extremely large planting season, over the top, more planting than usual type stuff. Your summer markets bottom in the spring and move higher. So you've got a bull flag here. You're above the 16 bar moving average. Don't ask me why they would key off on the 16 bar. My job is not to reinvent the wheel. It's to put the wheel on my car and drive very quickly with it. The wheel they're using is the 16 bar algorithm or moving average. Great, I love it. So Wall Street's using it on soybeans, so am I. There's a bull flag, Wall Street notice it, so do I. Projection from the bull flag, if it is a bull flag, there's always a question mark because you never know if a flag is a flag till it starts to produce. We're going to put a question mark there, but if it is a bull flag, your projection, short-term projection is 1,300 to 1,325. If the flag works, that's where you'll go. But you can see just how clearly this average has worked. Right, Wall Street noticed it and just went crazy on it. And it's like a year and a half that it's been working. Great tip, right? Use that 16 bar average on July soybeans. What else? Oh, so, okay, so a summer market, it bottoms, right? What's next? This would be considered not a summer market. This is a soft, it's a winter market. What happened to the winter market? Well, exactly when the summer market started bottoming, the winter market started topping. That's what they do. So the softs are coffee, sugar, cocoa mostly. There are others, but those are the big ones. Cotton. They are winter markets. They're strong in the winter. They get weak in the summer. Grains are summer markets. They go up in the summer, get weak in the winter. So if you didn't know that, simple, the softs are winter markets. Grains are summer markets. Coffee, sugar, cocoa, cotton, all that stuff, summer markets. Oh, excuse me. When it's winter in the US, those markets get busy. When it's summer in the US, these markets get slow and the grains get busy. So it makes perfect sense to have bear flags in sugar and bull flags in soybeans at this time of year. Perfect sense. If this is a winter market, should be going down. Summer markets go up basically from the spring through the summer. That was sugar, right? Okay, who is next? Cocoa. Look at this crazy. Even something as powerful as cocoa that went from 1,500 to 12,000 this year could not withstand when it finally started to get warmer. You see the winter and the softs territory puts tops in. So this is a soft, it's called cocoa. And look at how it got bearish right around the time grains got bullish. Makes perfect sense that it should. It's another winter market. What else? I am telling you that Wall Street watches these markets and watches these algorithms like hawks. Look at this. Bounce, 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 bounce. Look at the massive break when you finally get under it. Breaks, what's it do? It bounces right to the average, drops. Just about hits the average, drops. That's a winter market behaving as it should in the summertime, right? Summer here, winter markets are busy when it's winter here, not when it's summer here. So that would work for coffee as well. I don't know if that's part of the presentation. If anyone asked for it, it would be. So this average, by the way, which is working so well in cocoa, is a 14 bar simple moving average. And boy, oh, I'm sorry, that's an SMA. And boy, is it working really, really well in cocoa. Now, are there cocoa traders on this planet? Not many, just like the amount of growers. There's 2 growers. There's 3 people that trade it. Just kidding, but you know, it's not a busy market. But if you were crazy enough to trade it, this is what you would use to do your time. What else is out there? We just did cocoa, we did sugar. I think wheat is probably next. Yes, wheat was requested. My God, does Wall Street watch this stuff? Look at how right here, when the 12-bar algo started to kick in, Wall Street just went, that's it, let's start using it. And what happens? Boom, buy it at the algo or the average. Boom, buy it at the average. Boom, buy it at the average. Is it just the average? No, there's geometry in here too. Look at this. There's also geometry in here. You got trend lines. Let's make them solid, right? You got a channel right here. It's working inside the channel, hugging that average, monstrous average. Wall Street's in love with it, and they're not going to let it go. So you've got wheat just hovering this trend line geometry and the 12-bar algo or simple moving average. Wall Street's not stupid. They watch. This is not random. It's not by accident. I can find what Wall Street's looking for on any chart, any stock, any commodity, any ETF. You give me 2 minutes on a chart, I'll tell you what Wall Street's looking at. It's what I do. It's why I'm able to show you. Do they shift? In a snap. Funds will shift from using this 12-bar algo, throw it out the window and find something else in a split second. When that happens, we find else. We find what they're looking for and continue forward. This is what they're using for now on wheat. Another summer market. Did you notice? Did anyone even pay attention to that? Look what happens here. As soon as we start to get near summer, the bottom comes in. In the spring, the planting season, look at how the bottom came in. Yeah, I want to make this a little thicker. Maybe it'll let me. I just want to illustrate for you. That'll do it. Check this out. Look at how the bottom came in when? Feb, March, April. Exactly what I was teaching you. Another summer market makes perfect sense that it would go up as a grain in the summer when your soft sugar, cocoa, cotton are coming down. If you didn't know that, make sure you do for next year. What else do we have out there? There's so much to show you guys. Oh boy, have we gone over the doctor yet? We have not. Look at Dr. Copper. Someone requested copper. I was so happy because boy, I've been talking about copper for weeks and weeks in the trading room. And here's what I think about copper. Copper, like it's another cocoa vent. Whereas it quietly, silently started to run and no one paid attention, no one paid attention, no one paid attention till it was too far to stop it. And then Wall Street went in and kept buying it on top of the run that was taking place. That was cocoa. I think they're doing the exact same thing quietly in copper right now. No one's paying attention. Look at how expensive it is. And it's just quietly going, quietly. So it's exactly what we noticed all last year in cocoa, just quiet. No one said a word. It just started to go. And then, poof, well, copper is starting to do the same thing. It's an economic thermometer, and the temperatures look pretty high. What does this really tell us? This tells us our stock market wants to go higher overall. Economic activity is exploding. The price of copper is moving higher, or I think there's people running it as well. That's another story. And that tells us that the temperature is hot. The economic temperature, the thermometer is showing us hot temperature. And the good doctor, Dr. Copper, is one of those indicators that lets you know when things are starting to heat up. So good call for asking me about copper because it's a great indicator of what's to come. What else was requested out there? Gold, yeah, we haven't seen gold yet. So look at gold. Gold is sitting at this infamous double top. It's as clear as the day is long. When we see a double top, we sell a double top, right? That's what's supposed to happen. Here's what I will tell you. If it is a double top, we're going to drop to 2,400, 2,375, pull back. If it is not a double top and it gets through, you got 2,480, 2,500. So if it breaks through, here's your target. Now I'm going to make it a little thicker for you. If gold can get through the double top, you're going here. And these are short-term targets. If gold cannot get through the double top, you're going here. Let's make that a little bit. That didn't work. 18. All right. So here are your two projections. If it does not get through 24 to 2375, if it does get through 2480 to 2500. Now I'm giving you short-term stuff, right? Nothing far away. So that's how I want you to look at gold. We do know that double tops usually work. Let's let gold tell us if it works, then we're going here. If you break through it, yes, it goes right through, we go here. All right, so let's see. So no is no. If it won't go through the double top, it's a no. If it goes through the double top, it's a yes. That is what I've noticed for gold short term right now, top day. Another request from my OMNIACs. Number chart are we looking at this moment? Bitcoin. So check this out. One of my favorites lately. I have been showing Bitcoin in video after video and saying, look, this Bitcoin is doing a great job staying inside this channel. And if it holds inside this channel and holds this average, it's going to take off. Then I did a video when we got to the average and said, look where we are. Do or die. If it holds here, it's going to take off. Then I did another video to say, hey, we are buying dips into this average. Then I did another video on this day to say, short-term target, 72,000. Here we come. Check this out. You want to see something insane? On this day, I made the call. I did my analysis over the weekend. So for Sunday, Monday, Tuesday, we're going to get to 72,000. And this is what happened. Look at what happened, kids. I mean, can anybody else in the world do that for you? Tell you exactly where the market will go. It hit our 72 target exactly right when we said it would hit, right at the spot. You cannot make that stuff up, kids. So we gave that out to you on this day, and it went right to the target. Bravo, technical analysis, right? That is pure analysis, just doing its job. Now, if you ask me, this is a big bull flag. Representative of the flagpole is this upward move. This is your flag, hits the average, breakout is likely to occur. Now, where are we now? The top of the channel, top of the channel, top of the channel. Today's not the day to run out there and buy anything. We've made our projection. If you can get above the channel, bravo. If not, wait for it to get back to the average. But we did absolutely hit that target exactly what was called for. Viva la Omni is all I can say about that. The 85,000 target absolutely remains valid, but that's a long-term target. This is an ST, short-term target, and has already been hit. Bravo on that. I'm going to take a bow. Come on now, kids. That's pretty damn good analysis. Let's see what else is out there. We did copper, we did gold. Okay, so the next one is this. Now, this one is getting scary. At the height of inflation, at the height of the pandemic, at the worst time when all the trucks and all the ships were stuck, nobody moving anything, and we had supply problems, we got to a 140.55 on the measure of inflation, the Bloomberg Commodity Index. Since then, it has dropped all the way down to 95.19. That is not inflation. That's a measurement of deflation, right? Well, I don't know that I could call it a measurement of deflation anymore, because now let's take a closer look at what's happening top day. This is what our inflation has done lately, kids. We are currently at 107.25. We were at 95 and change, right? Look at that. Inflation is coming back. And that, that's going to definitely present us with some kind of an issue at some point. Just want to show you that it used to be the measurement of deflation, but I don't know I'm going to call it that anymore. It's back to inflation. Now it's back to doing its job, which is measurement of inflation. It was turning into the deflation measurement. But now look at that, huh? It's starting to go. Keep your eyes on that, kids. It's not just going to turn around easily. So you've got a whiff of inflation, although that does help push up the stocks because companies are charging a lot of money for products that they can make cheaper than they were able to make when it was 140.55. Now they can make them at 107, let's say, price. Let's just call that a crazy price of supplies. Well, how come the price in the store didn't get any cheaper? So they are making money hand over fist, and it's propelling the stock market. So that's one of the things that you do have going on there. What else was requested? I think the next one on the block was Chipotle. Check this out. Chipotle, this was part of a different webinar that I had done for Metastock. I'd used this in 2 different webinars, and for Metastock, I was teaching geometry. And I said, you know what, I'm going to teach you how Wall Street uses geometry. Here we are right here. Now you have to humor me on something. Everything past this rectangle did not exist. Well, if I could get it to spread out. Everything past here has not happened yet, right? So watch this. We are here. None of this has happened. We are only up to this spot right here with the yellow, and I make a call. 3,000 we're going to 1402. The geometry tells us we're going up over 3,000. Let me show you the target. I put this here and I put a target up there. None of these bars existed. Look what was done since that day. Went up. No, let me just pull this back a little bit. It went up, bounced off the geometry, went right to our 3,000 target. Bravo, like it was scripted. Think of the date when I gave you that target. I gave out that target in a live webinar on 1/6/23, January. It went right to the 3,000 target. You know what it did next? I put out a second target in the next webinar of 3150. Right, 3150. Bingo, bango, like it was scripted. This stuff will tell you where it's going to go if you know how to use it. Now, this call was made before your eyes, projected upon geometry. Target was put there before your eyes, and the next webinar you saw it actually hit. And the webinar after that, you saw the next one hit. I don't have any special voodoo. I don't know anything that you don't know. My brain is not tweaked any different than yours. I read charts and just keep my thought process out of the reading of the charts, and it comes up with phenomenal information, which I love to share with you. What else was requested? What's there not to like when you look at a chart like this? It starts on the bottom left of your screen and basically works its way all the way to the top right. You gotta love that, right? Right off the bat, we know serious bull market, simple. Like ES, NASDAQ, and the DJI, the Dow, all big boats are floating higher towards their previous highs. They're all at their previous highs with double tops right now. Well, Google is a huge piece of the market, wouldn't you say? Huge piece of the stock market, right? Well, at this moment is through the double top, is having a little bit of a pullback day, probably to come down here and check the support. It'll probably hit that support, hold, and hasta la vista is what you'd expect next. It looks fantastic. And I will say, if Google breaks through its double top, so is NASDAQ, so is the S&P, they're all going to go. So very interesting place we're at right now. Sort of a do or die spot, but not really. Google, it's already above the double top. So if you didn't see that, let me spread it out again. Top 1 to the left, then it comes back up and hits top 2. Usually that will make a market start to drop. But instead it went, I don't think so, went right above. So now if you get a test back to the support, you can break out from there. And I think that'll help propel the market higher, the whole market itself. Traders, if you like what you're seeing, please join my chat room. No credit cards are required. None of them are needed. You're going to get an email. It'll go to spam, I promise you. Go to your spam, check the email. You'll join my site. I'll show you how to do that in a moment. Let's get through a few more charts. But if you like what you're seeing, make sure you hang out with me. I look at charts of this nature every day of my life. Let's see what else was requested. You guys had great requests, by the way. I'm loving this. Mr. NASDAQ. Now, if you look at this NASDAQ chart on the weekly, this is the weekly, not the daily, weekly chart. I don't care if you stood on your head backwards, looking in a mirror with your eyes closed, that still looks bullish, right? That is a bullish chart. It's been, and now this is a weekly, don't forget, weeklies are serious charts. It's been in this channel for a long time. What's it do every now and then? Does a sideways to lower consolidation, then explodes into a long-term channel, sideways to lower consolidation, explodes into its channel. Long-term, weeks and weeks from now, next 2 weeks, next 3 weeks, next 4 weeks, this looks fantastic. Anything can change, but longer-term view, whoever wanted me to show you the NASDAQ weekly, your longer-term view is absolutely unequivocally not bearish. Yes, you get pullbacks like you see inside these red channels, but that's okay. That's customary. That's par for the course. That's what happens when markets trade. Nothing goes straight up. But look at that. Huh? Beautiful channels. These markets look fantastic. I just got a message from my trading room that our profit objective number 2 in our NASDAQ trade on the upside was just hit. Bravo, Omni, for calling a nice day trade today. That's another story. Let's go back to a seminar webinar. To me, it's a seminar, even though it's a webinar. I'm doing this live, right? NASDAQ was the last one I chose. Let's see what else I want to show you. Now, the NASDAQ looked bullish, right? Well, I have to tell you something, kids. This is not even slightly pretty when you look at the transportation average. That NASDAQ was a weekly, longer term. Short term, top day right now, transportation average on a daily. This is not the same look. I mean, I just showed you a moment ago a NASDAQ chart that goes straight up, like inside a channel like this, right? It's going up, 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 up. Well, when we look at this chart, it's not going up. It's actually the opposite. It's going down. Broke through what was a beautiful apex building here. If you look, you got a massive pennant flag right here, right? So massive pennant flag, getting tighter and tighter at the bottom, tighter and tighter at the top. It falls through the bottom, gets under the 200 ball moving average. Starts messing with it. Slightly above, creates a channel, falls out of the channel, retesting the average. This on its own merit looks terrible, just looks terrible. So is the transportation average trying to lead us lower? For this moment, it is certainly pointing lower, absolutely unequivocally. Can it turn around? Of course. What do we need it to do? We need it to get back into this channel. If you can get back into this pennant flag or channel, if you will, move this one out of the way. If you get back in here, all systems go. Likelihood is this will be called a false breakout, and the biggest move will come from the top, breaking out of the top of this. That's usually what happens in this case, but you've got to get back into the channel. Otherwise, of course, you break the 200 and down you go. So quagmire moment, hold the 200 back into the channel, beautiful thing. Break the 200, down you will go. And right now, I'm telling you, it does not look pretty. So that's your transportation average chart. Whoever requested that, I hope that helps. Let's see what else we have for you. The Dow Jones Industrial Average. Now, is that not the exact polar opposite of what I just showed you in the Dow Transportation Average? Polar opposite exact. This is exactly opposite. This is breaking out above new highs. Look, these old highs, these are new highs. You're breaking out into new highs. You're above the double top, or at least testing the double top right now. That is completely different from the transportation average, right? So you've got some confluence and signals right here. I will tell you, there's textbooks about how the transportation average is the leader of indices. It just goes first. The other indices do what they want for a little while and then catch up. That's not in all ways. That's not every year, but that's a constant, and it's been constant as long as I've been in the business. The Transportation average right now is pointing down. We need to get that back into the pennant, as I showed you, and away we go. Otherwise, eventually it will drag the Dow down with it. It's just how that works. Now, none of these are day trades, right? I'm giving you abstract view so you know what to look for the next few days and weeks. Is there anything else that was left out there that was requested? I think that was probably the last requested chart from my OMNIACs around the world. I hope that helps. I hope I answered some of your questions. Thank you for trusting me to do the analysis for you. Jeff, can I help you in any way before I cut out of here?
Yeah, we have time for just a couple questions if we go quick.
All right.
Nayan wants to know if you have a favorite grain like wheat, corn, soybeans, soybean oil. Do you have a favorite grain?
It won't be most people's grains, but my favorite grain is soy meal. I've always liked it. It really acts well with technical analysis. It is a great chart. I don't know what that comma's doing there. It is a great chart. It's a great market, and not many people trade it. But I've been trading soy meal since I'm a kid. I like soy meal. And if soy meal is moving, so are soybeans. So if you're more used to soybeans, you go with them. I like soy meal, and that's also moving higher because it's a summer market at this moment.
I like corn. It goes great with butter.
Corn's a good market. It doesn't move enough, but corn's a great market. It goes great with ethanol as well.
In fairness, I don't trade it. I just eat it.
I had not one, but one on the top last night during dinner. Yummy. Fresh. Great.
Scott wants to know how do you arrive at your SMAs?
So I allow Wall Street to show them to me in a strange way. I go around and look at hundreds of charts and I look at the averages that they're using until I spot the one that looks like they're all collectively using, and I adopt it to be my own. In other words, I don't invent the average. I don't even try to find it. I look for what they're using and call it correct.
Cool. This one isn't a comment. It's more, or it isn't a question. It's more of a comment. It's from Gary W. And he's on YouTube, and he wants to say that Oscar is the best. Go back and watch all of his videos if you want to learn something.
Blushing, but I can absolutely help you when it comes to technical analysis. No doubt, I am really strong in that department. In fact, if you would like, traders, I am sitting right now in a live trading room. Literally, it's on live right now. Look, I'm waving to you on one of the cameras I'm not using because I'm using the other camera. And you would be in this room with me, with all the other traders from around the world. And there I can communicate with you. I can speak on microphone and my camera. And guess what? You don't put a camera on, so you can be sitting there looking any way you please. It's only one way out, me broadcasting out. So you can sit there in your underwear if you want. Just don't tell me. And make sure that you join my live free trading room. Now, how do you get there? Go to livewithoscar.com. It is very simple, livewithoscar.com, and register. It's very simple. No credit cards are required. You will have to fill out username, password, and ask for your email, send code. The thing about that is it will go to spam. There's no way around it. It's going to spam. Go to your spam folder. Check that out. The next thing you know, you will be at livewithoscar.com in my free trading room. I also host once every few months. I host something called OMNICAMP, where I bring in 3 to 6 traders into my home office and I teach them how to gauge the charts, how to do the Omni Oscars market navigational indicator, much more intricate than the abstract analysis we've seen this evening, or this day, I should say. But the Omni gives us day trades, where to buy and sell, where to get in, where to get out. And last month, this is not my figure, by the way, I have 2 entities that follow every one of my Omni trades. Last month, according to my 2 different entities, we made $26,000 plus last month, one lot trading. If you took one lot of my trading recommendations, just one lot every day, you would have netted over $26,000 following the Omni. Now, that's not something I'm showing you here. That's called the Platinum service, the Platinum recommendations, and you can easily find me by going to livewithoscar.com, joining the Platinum service, join the site. But if you want to join me at OmniCamp, where I teach people how to come up with those day trades themselves, that happens at OmniBootCamp.com. Simple. These sites are really simple. I make them that way on purpose. You literally just come in here, click, you'll fill out a form. It'll ask you What time would you like to speak to me? Blah, blah, blah. And we'll have a telephone appointment just like that. So I'm easy to find. I'm always there, and I'm inviting you to come hang out with me. And it costs you zero to sit in my trading room with me. So come join me, OMNIACs from around the world. Traders who don't know me, we can sit and converse, go over charts. I am very easy to find, and I promise I won't bite you if you come to my trading room.
Perfect. Great job, Oscar. Appreciate you, man. Also, thanks, Nyan, Scott, Gary. Thanks for all the good questions. Thanks for being here, everybody. Oscar, as always.
Thank you so much. Thank you. Thank you. Now, I have to finish with this. You know that, right? Traders, it's something I like to tell my OMNIACs. When you're in a trade and you got to stop in, and that market's coming to get you, it's getting near your stop, and you're about to go in there and grab that keyboard and change the stop, flip, and buy more. Don't do it. It's a cardinal sin. Leave the stop in, because that's why we put stops in. And instead, say this to yourselves over and over, because it's what helps a lot of people around the world. Here's the thing you say. You ready? 1, 2, 3. Stops are
in.
You tell them, Jeff.
So are emotions out then?
Emotions are out. That's how
Jeff, I have that on a t-shirt.